Look at this descent. This is exactly what the IFRS 9 exam question feels like for most candidates, a chaotic whirlpool of complex rules, where thousands of marks are lost every sitting. Faced with that complexity, the natural instinct is to panic and start typing everything you know about financial instruments, pages of abstract theory. But dumping rules without connecting them to the specific scenario guarantees failure. There is a precise way to stabilize. It starts here, by using the computer-based exam platform not just as a typewriter, but as an analytical tool. We have to isolate and conquer 3 distinct technical targets hidden in the noise. First, asset classification. Next, impairment modeling, and the mechanics of hedging. By forcing this raw data into a digital structure, you stop the brain dump. You begin the process of translating complex, often deliberately obscured information into the clear, structured reporting expected in professional practice. This mock interface shows your exact operating environment. You have your exhibit window locked on the left and a blank word processor on the right. Before you read a single word of the scenario, you have a strict mathematical limit to enforce. You get exactly 1.95 minutes for every available mark. Go over that, and you cannibalize the rest of your exam. So you build your scaffolding immediately. Type out 3 bold headings on that blank right-hand screen: classification, impairment, and hedging and ethics. Next to each heading, calculate and type your hard stop time. Now you aren't fighting a massive, terrifying 3-hour countdown. You are managing 3 distinct 20-minute sprints. Setting this up takes less than 60 seconds. Having those buckets ready means that when you are hit with a wall of complex derivative data in the exhibits, you already have a pre-assigned place to put it. With the framework built, we move to the left screen. Do not read the exhibits passively. Equip the digital highlighter tool and start a targeted hunt. Look at this document text. We are scanning for specific business model triggers. If you see a phrase like linked to ESG targets alongside green bonds, you highlight it immediately. You are also hunting for anomalies. Management often uses complex instruments like interest rate swaps to intentionally obscure their real position and keep active losses completely off the balance sheet. The moment you highlight one of these triggers or ethical red flags, you copy and paste it directly under the appropriate heading on the right. You are moving isolated fragments of data out of the messy narrative and anchoring them to your structure. That active connection is what forces you to answer the specific scenario in front of you. First, apply the SPPI test. Passing forces the asset into amortized cost, FVTOCI, or FVTPL. Next, impairment tracks expected credit loss across 3 escalating stages. Finally, verify hedge accounting rules, navigmatically separating fair value against cash flow hedges. Typing out these steps as concise, bulleted applications beneath your exhibit data shows the examiner exactly how the rules dictate the final numbers. The technical math is done, but the evaluation is incomplete. You now have to bridge that IFRS 9 classification into the new presentation standards of IFRS 18, determining exactly where these figures sit on the statement of profit or loss. This is where we confront the anomalies we highlighted earlier. If management structured a derivative specifically to stash losses off the balance sheet, you treat that as a deliberate ethical breach. The ultimate mandate of the conceptual framework is that financial statements must provide a faithful representation of economic reality. Deception violates that core principle. Exposing these gaps in transparency transforms a technical answer into an evaluative report. It demonstrates that you can verify not just the numbers, but the integrity of the financial reporting itself. Look at this final response. You have a cleanly formatted, fully populated document. The isolated exhibit data, the strict IFRS 9 rules, and the ethical critique are entirely integrated. You started by extracting raw facts from a wall of text. You processed those facts through the SPPI tests and impairment stages, and you finished by holding management accountable to the conceptual framework. Memorizing the technical accounting standards is only half the requirement. Structuring the layout and using the digital highlighting tools are what allow you to convert that technical knowledge into a performable answer. Now it is your turn to execute. Log into the practice platform, pull up a past IFRS 9 paper, and apply this exact 4-step layout to the blank screen. This methodology builds the specific analytical reflexes demanded in high-stakes financial roles. You are practicing how to dissect complex data and deliver clarity under pressure. the exact standard required of a professional accountant.